Hey there, it's Bill with Smart Trades, and it's March 14th around 10:10 a.m. And just going to do a quick review today. And first off, let's look at that contracting triangle pattern in the S&P that I had mentioned in the last report. I said that I favored at least a retest of the recent February lows. Indeed, we have gotten that retest. I favor that as long as we don't exceed around 13.25 on the cash, that we've got lower prices yet to come. But it is possible that we've got a ABC down complete off the highs. I favor a test of about 12.75, and that this is only one of C to the downside. And as long as, again, in particular, we don't take out the high up here around just above, I believe, 13.25. Preferably, we want to see the market stay out of this triangle. In other words, you could see it test the bottom of the triangle on a weak rally, preferably with waning breath, and that would actually be exactly what I'm looking for. But we shall see. Here's a little bit more detailed count and a slightly different variation where, and I had discussed this, I showed a chart of the Dow with this particular count. Now obviously, if this count is enforced, there's two things that are a bit of a concern. We didn't extend in wave C beyond the top of wave A. That's a bit unusual. Failures do occur. And additionally, it's just a relatively short wave C relative to the rest of this structure. Nonetheless, I mention this because if indeed we take out the 1275 area with a vengeance, this count definitely comes into play, and that is that we basically have a top here in mid-February, wave 1 down, wave 2 up with a failure in the C wave position, and a series of 1-2s to the downside, which is very, very bearish. Excuse me. That said, I prefer the ABC count. I prefer that we're going to hold around 1275, but let's see when we get there. I mean, this thing, could go lower. There's a lot going on in the world right now, and in particular the situation in Japan and Libya, obviously, and the situation with those nukes in Japan is a major concern. Excuse me. So anyway, here is that same count. Basis the S&P I didn't label. Excuse me, this is actually the ABC count. This would be A down into late February. We have a triangle A, B, C, D, E to B, and from there wave 1 down of C. Again, we've come right back up and tested the bottom of the triangle. We just about tagged the trend line perfectly, depending on how you draw the bottom of that triangle on the futures. I prefer that this rally is A, that the decline today. These charts obviously are a bit dated. I put these out for my clients on Sunday. That this rally is A, that this decline that we've done today is B, and then we've got a C wave back up, perhaps about to 1305, 1310 basis the futures. In the futures, you don't want to go through 1321. 1321 is going to break the bearish count, at least the ones that I've shown. Here's something interesting, and I do want to say my heart and thoughts go out to the folks in Japan. We live in earthquake zones out here on the West Coast, and my prayers go out to those folks. Anyway, about earthquakes, this is a shot of the 1989 San Francisco quake, and the market prior to the quake, actually about 2 trading days before the actual quake, went into this panic mode. And it made me wonder at the time, is there some form of nervousness that traders feel before an earthquake? Obviously, there's a lot of major quakes that have happened up there, but the difference between a quake in Tokyo or San Francisco is that the actual local area of the quake is in an area where there are a lot of traders. A quake in Indonesia or Chile or whatever, obviously it's just as big a concern for the local folks there, but it's not a concern for the traders and the actual people in the market that might kick off a little panic are simply not located in the area of those other quakes. At any rate, here we have the current quake, and we had a series of sharp declines prior to the quake. Again, here's 89, here's the current quake, and the market was declining ahead of it. Now this is a sample of two earthquakes, so obviously it's a very small sample. I'm not drawing any conclusions. Nonetheless, I do find it interesting. The dollar, the dollar bottomed right at our 1=5 target, or perhaps just a tiny bit below. You had a daily close virtually on the target. From there, however, we have rallied back up to the trend line, and so far we've failed to bust through there. This is what I sent out to my clients last night, kind of a heads up that this pattern may be an ABC. In fact, that's what it looks like. You can see the clear A, 5 waves up in C, and we have since taken out this B wave at 76.81. That's a red flag for the bullish case. Now, could we still be in a bottoming process? Yes, but it's much less likely that that this is an impulse off of this low. In other words, we should probably either test the bottom of the triangle or perhaps make a moderate new low. But I would say that lower prices are favored, given that we've taken out the bottom of the B wave, and this is, you know, I think best counts as a confirmed ABC to the upside with an impulse back down. Crude oil. I've relabeled this count. I had talked about this as a possible 1, 2, 3, and then 4. We've obviously broken down from there. Indeed, the decline is looking rather impulsive. It's even more impulsive than what you're seeing here. And if that's the case, it's possible we've topped, or that we're into an intermediate type of correction off of the highs in crude. The 95.60 area is the bottom of this X wave or B wave, however you want to label it. If we take that out, I think that really increases the probability that that we're into at least a short to shorter intermediate term decline off of the highs. At any rate, just a quick report today, and just wanted to update everyone since the markets are pretty volatile. Just a quick synopsis: possibility that crude is bottomed. I think that there's a good chance that the stock market still has lower to go, although it may be bouncing on a very short-term basis. Also, there's a pretty good chance, better than 50-50, that the dollar is going to make new lows. That could coincide, obviously, with a little bit of a bounce in the stock market, if indeed it occurs. Anyway, thanks a lot for watching. Hope you're having a great day and a great week ahead. Thanks again. Bye-bye.